Canadian investors are using ZSP over any other ETF for exposure to the S&P 500 index. Institutional investors, investment advisors, and DIY investors have all been trusting ZSP with their investment dollars since the fall of 2012. ETFs provide instant access to a portfolio of stocks to an investor in a single, cost-efficient trade. For an investor to own the entire index would require institutional-level trading systems and expertise. To accomplish this, an investor would have to buy 500 stocks at a time, and then as the market moves, it would constantly have to rebalance those 500 stocks several times a year. ZSP simplifies this process by aiming to provide instant access to the 500 stocks in the index in a very easy and low-cost way.
Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to Loonie Hour, episode 143. As always, joined by the three amigos, Keith Dicker, IceCap Asset Management, Rich Diaz. What's going on, buddy?
Me?
Yeah, you.
I'm just really happy we landed Ivan Dimitrov with our 5th overall draft pick. That's the most important thing that's happened
For the
this
Habs?
week. Yeah, man. It was
Never
a
heard of
great
him.
draft.
Future
Great.
blast.
He's a Russian. We need more Russians on our team. And the Habs did really, really well at the draft. We didn't make any stupid signings, which is usually they give money to all kinds of players who are over the hill and not worth it. So I thought it was a great week for in
That's
Habs
why I
land.
told you July 1st is my favorite day.
But yeah, what about you, Keith?
I did not follow any NHL.
Boo, boo.
Boo.
Yeah. We had a real nice Canada Day weekend here, just family, hanging out with friends and stuff like that. So it was lots of fun. What some people didn't, what people have missed, we have this classic Loonie Hour moments that are not recorded, the pre-conversation. We won't go into the details, but we just had one of the granddaddy one then. We all agreed to do something, and then 5 minutes later, Steve, what are you talking about? We haven't even talked about that.
Oh, I got to promote your guys' event.
Yeah.
Montreal
But that's
that I'm not
something
attending.
that's the Loonie Hour story, though.
What did we
But,
agree to?
Tell everyone, Steve. Tell us what you didn't agree to.
Keith and Rich are apparently hosting an event in Montreal on July 18th. I will not be in attendance. I don't know where the venue is, but there's going to be tickets apparently that I'm selling starting as of today that you're listening to this episode. If you go into the description, there will be a link to an Eventbrite page where you can purchase tickets to said mysterious event and to, this meet and greet that will be happening on July 18th. Come hang out for a couple beers, and I don't know what else they're going to be doing, but that's all I can say. Keith,
That was
okay.
good. That was
good.
better than the Calgary announcent. That was really good. Thank
was
you for
good.
doing that. Don't you
Thank
think
you.
so, Rich?
I thought it was great. I'm sorry you can't make it, Steve. Soon we're gonna have to do a meet and greet when we're all there together, but we'll worry about that maybe in August.
Well, that's coming up soon. I think we have something
Yeah.
cool coming up in September. I think it might
Yeah.
be. Yeah. Anyway, everyone, Montreal, come hang out with Rich, and I'll be there as well. So we'll do that. So guys, this is, we had Canada Day week, and then this is being recorded on Thursday, July the 4th, and today is tomorrow, which was yesterday. Have you heard some of those weird quotes coming from the one of the politicians in the US? It sounds something like that. But anyway, everyone, it is a quiet week market-wise, but we are still getting some really great data coming out that we'll be talking about today. We'll run through that. And I know Steve has a couple other items as well that's catching his attention. The same with Rich. So why don't we jump into it here?
Yeah, lots going on the housing front. I just wanted to mention, I've talked about this. I think I don't even know where to start on all this. I think one of the interesting themes of, and Keith, you're more the markets guy than myself. You've been in this a lot longer than I have, but I've always had a fascination around markets, and I just enjoy studying and reading about them, and it's like financial history. And I'm sure Rich is kind of up that similar alley. And it seems to me like every sort of like bubble that has always like burst historically, like it feels like you also get regulation that kind of happens at the same time that kind of comes in and basically like pricks the bubble like almost unintentionally. And so like one of those ones where I just keep kind of looking at it is just like what's happening in like Canada and particularly here where I am in BC with just like government regulation like coming in and like dogpiling on top of the housing market when it's already just like really beaten up. And so it's just interesting because like I think it's so I'll give you an example. I was up in Penticton, BC over the Canada Day long weekend. I mentioned that we go up there every year. Like my wife and I, we got married up there. It's like it's wine country. So it's all the local wineries. The BC government's like very adamant of protecting their wineries. And they brought in a Airbnb ban. So basically, province wide, if your city is larger than 10,000 people, you can only Airbnb your primary residence. So you basically have to be living on site, right? Which is like if you think about the majority of people that are going up to wine country, it tends to be like a lot of like people from Vancouver. You know, like they bring their loads of cash they have from Vancouver and they go and spend it on all these wineries and restaurants and boats. And it's kind of like this tourist town. So for them to basically ban Airbnb, there's not really a hotel supply in Penticton, and Kelowna is the same thing. So Kelowna actually opted in and said, and they actually doubled down and made the restrictions even more stringent. And so just being there this weekend, chatting, and the only reason why I was there is because I was managed to book an Airbnb further out in Naramata, which is non-compliant. Everyone was saying how slow it was. So all the restaurants, I was chatting with the hotel people at another restaurant. I talked to the winery people. Everyone was just like, yeah, it's pretty slow this year. Like, you know, it feels like the economy is just not that great, / nobody can get Airbnbs anymore. And I was like, man, like you've just decimated this. Like you already in like I would say like a recession, and then you've doubled down by like not allowing people to like come up and stay. So I just found it very interesting. I was just like, man, like government policy.
So how does that policy, the gist of it, of course, in a bigger city or a bigger town is to ensure there's less units available for, quick overnight hotel rentals. Basically, it's just a hotel if you think about it.
Yeah.
And therefore, by default, it should be longer term rentals, which would be able for people to live. Correct? I mean, that's the objective.
Which again, I think makes sense to some extent in like a city like Vancouver, where you're like, this is like a major metropolitan city. Like, but you go to like some of these towns, like Kelowna, Penticton, like these are tourist towns. Like that's what they survive on. I mean, there's not a huge depth of a labor market there. It's one that caters in the summer predominantly to people coming in and visiting the wineries, renting boats on the lake. These are summer homes, and you get a little bit of people coming in the winter too to go skiing and stuff like that. But like it's a resort destination, and because it's like kind of like these are kind of like smaller cities and towns, like you don't get massive hotel chains there, so there's not a lot of depth for hotels, and so you're kind of reliant on those Airbnb types to actually support that local tourism market.
Yeah, absolutely. So what's happening? Did you have any conversations with people who own a rental, former Airbnb listed property?
Yeah.
And what are they
Yeah,
what are they doing now? What are they doing with the property?
Yeah, no, so it's funny enough. I was actually chatting with our server. She worked at this place called the Naramata Inn, which is like a very, very popular restaurant. So she was saying her Airbnb was actually in Naramata, which is just outside of Penticton, and so it's technically considered like a different city. So they were allowed to Airbnb, but she's like, I've got friends with Airbnbs in Penticton, and like they're just screwed. So I think they're all scrambling. Everyone's trying to figure out what to do because it just happens so quickly.
Wait, but how many units does she own?
5 condos in a house.
And they're all Airbnbs?
No, I'm joking. It's from the line from The Big Short.
Oh. It's just the gully.
But anyways, like long here, I'm just gonna paint one more picture, and I don't want to like ramble on about this, but like, okay, so I'll just again keep in mind for everything I've just said, and I know like people that are like, well, where's Penticton? So they got this like beautiful, again, like lake country. So if you've got like a really nice house on the lake, let's say it's worth $2.5 million. A lot of the times it's owned by like someone in Vancouver. It's their vacation home. They'll use it 3 months out of the year in the summer and maybe a month in the winter. What the BC government's done over the last like 3-4 years, so they brought in what's called the BC speculation tax. So if you don't have the house rented out for a minimum period of 6 months, you have to use the house for a minimum of 6 months. So either you have to live in it for 6 months or you have to rent it out for 6 months. You'll pay a 1%, as a BC resident, you'll pay a 1% annual tax on the value, right? So on a $2 million home, it's $20,000 a year in taxes just to use this home because you're not
To use your own home that
use
you
your own
already
home.
pay taxes on.
Because, well, you got to be renting it out for 6 months. But then the problem in BC is like, okay, if I rent it out for 6 months, it's impossible to get tenants out in BC because the regulations state you basically can't get rid of tenants. You can't. You have to give now. You have to give them They just brought in a new rule says you have to give a tenant 4 months notice if you want to basically occupy the home for your personal use. So like, but if you're going to use it in the summer, you only want like tenants temporarily, but you can't temporarily get them out. So there's no way. And now you're not allowed to Airbnb. So like they've basically have in my opinion, they've pried these houses out of the wealthy hands, basically.
But who's going to buy them? There's going to be no bid.
I honestly, I don't know. I mean, like, because like the local market's not that deep. Like, again, there's not like necessarily high incomes in these like smaller towns. I mean, these are like lakefront properties at $2 million don't have like a massive local bid.
And are you seeing listings rise?
I mean, I just don't follow that market close enough, but you're kind of like, I don't know who would buy this because to get the use out of the $2 million lakefront home, you're going to pay a $20,000 tax. That's assuming you're actually declaring it ethically, that you're not occupying it for 6 months. I imagine there's a whole bunch of people that are just saying, well, come find me and then I'll just declare that I'm using it for 6 months. But anyways, long story short, so all these regulations just piling in as the market's kind of rolling over. I just find it very, very fascinating. Just government policy is just, yeah, it's interesting. It's very
well, do you know who likes to create a tax with the word speculation in the name? Speculation tax.
Who?
Commies.
I'm going.
You went there. I was going to go there. You said it.
You need to have speculators and hedgers in every market for it to function. So
well, the best part, because politically, you can you angle it and say it's a speculator's tax, but meanwhile, you've owned this family vacation home for 20 years, and you use it in the summer. Does that make you a speculator?
According to the commies, yes.
Anyway, so that's my rant for the day. I think they're going to just continue to hammer onto this housing market. I think unintentionally. I think that just looking at some of the data as well. So we got the housing data in Vancouver and Toronto for the month of June.
Just back to the story for a second, though, Steve. Since this speculation tax has come on, has there been any data to show that the number of rental units in, say, Vancouver, for example, it is increasing? Like, have there been any positive results from this move so far? None.
No, I just
Is
don't
it
think
too early to tell.
Too early to tell for sure. But like again, to go back to Penticton. So what are you gonna tell me? You're gonna tell me to rent out this $2 million lakefront house to some like local resident at like what? What are they gonna be able to pay? $4,000 a month? Like it's a $2 million lakefront home. You're better off, like, you know what I mean? Like most people are just like, I'll just leave it empty, pay the tax. You know what I mean? Like, Keith, are you gonna rent out your summer vacation home year round? Like, you want to use it. It's not going to end up back in the long-term rental pool. It's just I don't know. People are just going to skirt around taxes, which I think is kind of what's happening. And so I think people are I think that the housing crisis, everyone's looking for like the solution and what's the problem. And I think the problem is, I just don't think Airbnb is the crisis that everybody is making it out to be. I think that the crisis is money printing, excessive, deficit spending, obviously shitty policies, not building enough housing, bringing in 1 million people a year, leaving interest rates at 0% for the last decade. Like, that's why you have unaffordable housing. I don't think it's because you have a few people Airbnb-ing, but again, I digress.
That would be far too sensible. But doesn't this ultimately just push these transactions into the black market or into the underground market? I mean, I'm gonna get my mom in trouble. Wait, I got a story. I'm gonna get my mom in trouble. This is a good one. Like, when my mom's in Portugal right now, which is why I seem very relaxed. And
whoa. So your mom are you having a party tonight, Rich?
No, baby.
Not tonight.
Party.
Not tonight, but it's gonna happen anyway. So she's in Portugal, and when she goes to the beach, which is called Nazaré, which is a beautiful beach made popular by an American surfer who surfed the 100-foot wave. I've been going there since I was a kid. Anyhow, she rents an apartment from these Portuguese ladies, and she sure as hell doesn't declare it, or the lady who gets the money from my mom for the month or whatever doesn't declare the tax, doesn't declare the income, certainly doesn't pay any taxes on it. And she's been doing this for, I'm going to get her in trouble now, really, 20, 30 years. And, I'm making fun of my mom and making light of the situation, but there are hundreds of towns all over Europe, and I'm sure in the US and now in Canada, where people just do these transactions anyway, and then just simply don't declare it. I mean, how feasible is it for a regulator in Kelowna or British Columbia to go visit every single house that, Steve, you might want to rent with your wife or whatever for a month or 2 months? I mean, isn't that just going to push all these transactions sort of
I can tell you it's happening because I have these conversations on a regular basis. And so, yeah, people are finding creative ways to get around it, either by just not declaring it
in a duffel bag.
Yeah, or they're creating like almost like new like platforms like outside of Airbnb that you kind of have to like wink, wink, nudge, nudge, know of this platform. There's another rule where you just have like a caretaker live in like the downstairs suite that stays there very periodically, and you draft up like this sort of quasi rental agreement and says, see, she's living here, but she's really not there. So there's a lot of stuff, in my opinion, that like government regulation gets so extreme that people just eventually just opt out. And I think that's what's probably going to happen.
Well, that's the irony. I mean, oh, go. Sorry.
Yeah, I mean, the easy solution for this by the government is, just to implement the central bank digital currency.
No.
Well, it's true, because then you're able to, track every dollar where it's going to.
Every dollar.
Every single one. So
except the ones flowing through the slush fund, the green slush fund. That money is going to be that money won't be in central bank digital currency.
Well, there will be some negative effects from doing it, but that's okay. So
yeah,
we have
I've got
the solution for a challenge is more taxes, and which just creates more generates more creativity to get around it.
That's right.
And at the end of the day, it hasn't resolved any of the initial challenge that it was trying to fix. Correct?
Yeah, so
that's what we are.
And I want to elaborate on that further, because this is going to tie in well with where I'm going with this. So we got the June data for Vancouver and Toronto for home sales data. So in Greater Vancouver, home sales were down. They were the lowest for the month of June outside of June 2019. I don't know why that year was so weak, to be honest, but that's
when you're on vacation, right? That's why no sales were going through.
That's right.
Yeah, I mean, it was basically the fewest home sales. I mean, they were basically 30% below the long-term average. So home sales for the month of June were really, really weak. Inventories obviously piling up. We have the similar data in the GTA as well. So the GTA home sales, I think, were down about 26%. Months of inventory is up around, I had it here just a moment ago. But anyways, months of inventory is like shooting through the roof. Basically what we have is a scenario, which we already know, is basically all these condos are piling up in like the city of Toronto. So like that's really where your issue is. That's kind of the issue in Vancouver as well. Most of the inventory that's building is building in the condo market because the investors are basically exiting the market as their mortgage interest costs, surge 30%, and your rent growth is starting to slow because the economy is going into the gutter, and you have government regulations piling on. So, for example, Ontario just announced this week that they're capping 2025 rent increases at 2.5%. So again, imagine this. You're an investor in Ontario. You were cash flow neutral when you bought this property, whatever, 3 years ago, 4 years ago. You're coming up for your renewal. Your mortgage rate's going from 2 to 5%. So now you're going to be losing, whatever, $800 a month. And the government's saying, well, you're allowed to raise your rent by 2.5%. And that's the same thing that BC said this year it's 3%. So like you're capping rent growth, you're capping the revenues below the rate of inflation and below the rate of obviously the cost of maintaining these properties.
Hey, Rich, which part of the world limits price increases that you can use?
I don't know.
Who
The
around the
commies, I
world?
guess?
Yes, the commie. You cannot raise prices. The price of bread is this and that.
I don't know.
It's-
Anyways, guys, I don't want to like belabor this point, but I just think like if you're a landlord in BC, keep in mind I sell real estate for a living. I can't make a compelling investment to own an investment property in BC, and I'm sure if you're in Ontario, it looks just as bad. And I think people are figuring it out now, but the problem is there's now little to no liquidity to do so, and
Liquidity in terms of cash, or liquidity in terms of like inventory of houses?
liquidity in terms of getting out, right? It's like you're like, oh man, I'm now negative cash flow $800. Like this market stinks. Where's the upside here? Like our prices are really gonna go up, and when mortgage rates are at 5%, and the government keeps capping my rent growth, like maybe I should get out. And so I think you had all these investors piling into the market because, Keith, as you know, it was the trade where you could not lose money, right? Everyone's like, you got to own Canadian real estate. You got to build a rental portfolio. Rates are 1.5%. You got to buy. Everybody piles in at the top of the cycle. And now it's kind of all unwinding at the same time. And now you have a bunch of people trying to, squeeze through the exits. And it's a pretty small door. There's a lot of people trying to get out.
It's way in the back of the gymnasium. I know some people who are following us. They're probably they are renters, so they know people who need to rent or they want to rent, and so they might see this conversation as, oh yeah, people are just being greedy and stuff like that. But just to provide some balance with this conversation for everyone. And this is for people who do want to rent. They say, hey, rent is too high. I can't afford it. I need more income and all that stuff. The point that Steve and Rich were just highlighting then is that as a renter, you want to rent someone else's asset, which is a condo, an apartment, or a house or something. And that is their investment. If they can't get an appropriate return on that investment, then they're going to sell it. They're just going to get out of that market. And that's what we're talking about here. So if a market isn't attractive to use the word again, to attract investment here, the same with foreign investment into Canada as well. It's the same story. Then that's how a market becomes very weak. And, we do hit one of these moments where, hey, you need to sell and there's no one to buy it. So it's not a story about, you have these greedy landlords or homeowners, stuff like that. And I'm sure that does exist out there. But as an investor, if you're not compensated for the amount of risk you're taking, you're not going to make the move.
So Keith, can I just add to that point? And again, for like, renters that are out there saying, well, hold on, let's hear like my side of it is, if you want to see rent relief and lower rents, or rents that don't go up 10% a year, I mean, one of the ways to do that is to get a lot of supply into the market. And one way to encourage supply is to encourage investment, right? So when you make the rules so anti landlord, anti-investor, anti-capitalist, people don't invest in new housing stock. So this is the issue that I'm saying is I can tell you because I study housing markets for a living. BC has the strictest tenancy laws in North America, not in Canada, in North America. And coincidentally, we also have probably one of, if not the worst rental market situations here in BC. And so this is what I'm saying. And if you actually talk to very, very wealthy money in BC that actually builds rental housing, because I do, their only bull case thesis is that all the regulations and all the restrictions and the red tape and the bureaucracy and all these ridiculous regulations they bring in is a natural throttle on new supply. And so their view is, yeah, I'll deal with all the crap, all the regulations, all the restrictions about the ability to raise rents to market. I will deal with that because I know that this is going to continue to squeeze turnover rents higher when people leave, and it's going to push prices higher and land prices higher over time.
You
Because
sound like a capitalist when you talk like that.
Come on.
anyway, so that's my rant for the day. It's actually unbelievable. Yeah, it's just it's the never-ending housing crisis that will continue. So one other thing I want to add. I invest in Calgary. I build rental housing in Calgary. And people say, well, they have no rent restrictions there, no rent controls. Look at the rents; they're up 15%. But if you analyze them over the last 10 years, rent growth in Calgary or in Alberta in general is like very low, very, very, very low. Because what happens is anytime the housing market starts booming there, they just start building a ton of new supply and a ton of rental. So right now in Alberta, like they are building a lot of rental housing because it's attractive to do it. And what
Well, can I
happens is
just
eventually that market gets oversupplied and rents actually decline. Rents have and they will decline again in Alberta. I can promise you that.
I guess just my little piece to add is to maybe change the framework in which people sort of think about rent. Rent, people don't think of it as maybe I'm wrong about this, but it's a price, right? And it is the price, and I'm the nerd, so it's where your demand curve and your supply curve meet is your equilibrium price. And if you don't control or don't manage that price, it will find that hopeful equilibrium. Now it can get dislocated, of course. We know this, and those dislocations can last for a long time. But when you control prices, e.g., control rents, you get some severe and often negative externalities. And so another nerd economics term for you. And so people think that rent control is always the answer. And there's a lot of research. The Federal Reserve has done a lot of research. The Brookings Institute have done a lot of research on capping rents or rent control. And the problem is that and I'll just read it. Rent control properties create substantial negative externalities on nearby housing markets, lowering the amenity value of these neighborhoods and making them less desirable places to live. Why? It's exactly what Steve said, which is people are reluctant to invest in there. They're reluctant to provide more supply. And when you constrain that supply and you have rising demand, those prices have a lot of upward pressure on it. So yes, maybe the people who are incumbents living in their flat they're happy, but everyone else is, let's say, unhappy. And so if you think of prices, if you think rents as prices, and you think about, is it a good idea to control prices full stop? It's very, very rarely a good idea to do so. And it's just exactly the same with housing and rents, in my view.
There's no upwards mobility now in place in markets like BC because people know that like, oh, I'm in this rent controlled unit. Basically,
Right.
It's almost impossible for the landlord to get rid of me. Every
But they
year
also never want to leave. They never want to leave.
They don't leave. So there's no turnover, right? So like there's no churn. So prospective tenants that are in the market needing a rental spot, they're like, wow, there's nothing available because there's no churn in the market. So, anyways, again, not to I don't want to hammer that point, but basically, I was like summarizing it all. Is I feel like what I keep hearing anecdotally, seeing in the housing market, chatting with all these Airbnb hosts and towns. I just feel like the Canadian economy is anecdotally getting a lot weaker, a lot softer. It feels like all these things we've been talking about. It feels like the rate hikes have finally sort of filtered through. And I'm just getting more and more information on a daily and weekly basis of people that are really struggling. I don't know if
Yeah,
you guys are getting that same
I'm
thing.
hearing similar stories, but I'm not hearing, nothing has fallen off a cliff. So I don't want everyone to, the Loonie Hour is not telling that story right now, but it's still, we have our anecdotal stories, and then we have some hardcore data, which we'll go into in a few minutes. With this, it's a diffusion index, so we'll get some coffee, everyone. It'll be a snoozer, but it is. I'm also hearing and seeing the anecdotal stories now as well. So we always talk about, hey, which way is the trend going? Is the trend continuing in the same direction that we expect it's going to continue on? And it is for us. And just to be clear, we do expect, I mean, IceCap, our firm, we're expecting that we're going to hit a recession coming up. The question is it going to be shallow or, a big hard landing with a thump? Does it originate within Canada? Is it someone outside that pulls the trigger to get it moving? But I'm not, based on what Steve is sharing with me from the real estate side, this just further supports the view that it's not getting better yet. It continues to trend a little bit lower. Is that what you guys are hearing as well? Does that make sense?
Yeah, I think I
for-
just go ahead, Rich. You go ahead, chime in.
Well, I was just gonna jump in with boring data, which is, there are different types of indicators you can see.
Well, let's
Some
get to
retail-
that. I want to get to that because I know where you're
Okay,
going
go.
with this. Let me
Go,
throw
go.
in. I just had an email. I want to read this out from a Loonie Hour listener. They work for one of the big Canadian banks, rather large. They've been in the mortgage business for a long time. So I'm just going to read this. It says, I've been in the mortgage business for 20 years, and it's never been this bad. Every day I'm coming across clients who are not given the information to make informed buying decisions. I'm seeing appraisals on new construction properties coming in 30% plus or minus lower than the original purchase price. Clients don't have the additional cash to close, and we're not aware lenders are offering financing for new builds with rate caps, guaranteed approvals. I'm seeing clients who are renewing mortgages with $100,000 plus in deferred interest payments and no equity to refinance. They were not communicated on how fixed payment variable mortgage works, and the list goes on. It is honestly just unbelievable the situation people are in. Well, believable since people treated buying real estate like buying a new pair of shoes. So
that's really sad to hear, Steve. Do you think there's a chance though that maybe this person's experience is more focused on where they're located, or is it representative right across the country, do you think?
No, I mean, I have to think here's what I think. I think the epicenter of the real estate issues and crises, I think, is emanating actually in Ontario. I think particularly in the GTA. I think the GTA, first of all, had way more speculation. Rich, you probably know this. I think they had way more population growth, and I just think it was like the epicenter of it was a frenzy. And not to say that it wasn't a frenzy in Vancouver and in Montreal and in other parts of the country.
Saskatchewan, don't forget Saskatchewan.
I just think it's just gotten so crazy over there, and I think that I think we're seeing that in the data. I mean, they've had the sharpest sell-off in home prices thus far. You're hearing a lot of people unable to close on their pre-construction, and so yeah, I just think that we talked about it last week, right? New home sales, like pre-construction sales in the GTA, are their lowest levels in 2 decades. I mean, that's worse than the GFC in 2009. I mean, that.
Well, let
this is
me
not
let
a
me
good
just
sign.
jump in there. I think that's exactly the point. I think sometimes we forget how these sort of housing price issues work. I mean, just to give, I think just we identify the risks, we articulate sort of what might happen. There's anecdotal evidence that supports some of those views. There's some that goes against it. Then there's hard data that comes through. But then often the negative or societal effects take years to really bite, whether it's in terms of articles in the CBC, whether it's us patting ourselves on the back or whatever it is. And I think it's important to remember that, just as maybe as a silly example, US home prices peaked in 2006, early 2006. And we didn't have a trough, depending on what series you use, Case Shiller or, whatever it is. But or the Federal Homeowners Association, or whatever it is. So I'm just using, I'm using the National Association of Realtors. And the median existing single family home peaked in early 2006 and didn't trough until 2013. So that's almost 7 years, and the recession in the US only really hit in March 2008. I think the low in the S&P 500 was March 2009, 666. So do you know what I mean? There's like almost a 3-year period before house prices peaked and where we really started to see significant job losses in America. Now, I'm not comparing the two cycles. There was many different reasons. But my point is, it just takes time. And I think that's what I think that's unfortunate with housing crashes and housing bubbles, is that's the last thing you're going to give up, right? You're going to give up vacationing. You're going to give up, buying Patagucci vests or going on, buying a dog or a house or a car, whatever. The last thing you're going to give up really is that house. And I think that's why, for rightly or wrongly, I think that's why it takes forever for these things to manifest.
So I was chatting with a Loonie Hour listener, works for a very large furniture retailer in Canada. And he says to me, he's messaging me. He says, yeah, we just went through a round of layoffs. All I can say is consumer spending is getting crushed. And like this individual is like quite high up. So it's not just it's not a pencil pusher at this company. This is someone that's very high up in a large furniture retailer and a popular one, I should add. Not like they're getting crushed because, they haven't kept up with modern trends and their business is kind of dying. And this is like an up and coming. So anyways, I just think the anecdotal stories that we're getting continue to point to Keith's thesis, I think, which is I think an economy that is heading into a downturn.
Mm-hmm. Okay. Why don't we move next then? Move away from the anecdotal stories to the big data points that came out this week for Canada, Rich.
For Canada, I got all set up for the US. Which one did you want to talk about? There was
Services and manufacturing.
Oh, right. So Canada's manufacturing PMI came out, but there's different. Canada's manufacturing is weird. It's not as important as the ISM. The one that I was looking at was the Ivy. So the Ivy is a school. I think it's in British Columbia. It's right. Is it Ontario? I screwed that up. Anyways, so we're seeing basically
it's Toronto, man. It's in Toronto.
I forgot. Oh yeah, that's right. London, Ontario. It's London, Ontario. Although they have a campus in Toronto. But anyways, so their PMI fell to 52. That's one. So remember, on the diffusion index, Keith, above 50 is expansionary territory and below 50 is contractionary territory. They seasonally adjust these data points, which makes sense because there's different parts of the year that have more activity and others have less activity. So that's one that came out that's bad. And the other one that I had right here, I lost it now, was a different PMI. Last week we talked about the Canadian Federation of Independent Businesses, and the biggest hindrance or the worst thing that's affecting their production or sales is insufficient demand, both foreign and domestic. So that's the second one. And now, while I tap dance quickly, I can find you the last one, which is the S&P Global, which is so S&P 500. S&P Global is a data aggregator. They do all kinds of surveys, etc., amongst other different businesses, indexes, whatever. And so their latest, again, it fell to 49.3. And so it's just more of the same, but that's on the manufacturing side.
You missed the one chart. Our friend of the show,
one?
Ben Rabideau.
Oh, retail sales.
No.
Which one?
You see the liabilities and insolvency filings?
Right. Sorry, I forgot.
So Ben posted a really good chart. We'll share it here, but the dollar volume of liabilities for insolvency filings across Canada's largest provinces. The chart is like, we're up over 1,500% on a year-over-year basis. So again, maybe, I mean, last year it wasn't necessarily low either, though. So seeing that chart is a little bit, it's a pretty scary chart.
Yeah, I think you have to. I think that chart really should be common sized. So like the economy, it does look like a
You
ski
hear
hill.
that, Ben? Suck on that. Bad chart.
But my only critique on the chart is you have to adjust it by the size of the economy. So it should be done as a percentage of GDP, because GDP is obviously bigger now than it was yesterday, etc. But it is still crazy. I mean, just
Well, where's your
see how the
chart?
I'm in the I'm right now. It's not exactly the best charting part of my life, Keith. But anyway, so yeah, that's the only thing I have to say. There's lots of US data that I'd like to talk to as I would tap dance quickly away from that subject.
Well, just to conclude, then, I mean, there's. I think Rich had a lot of excitement in his voice, and maybe some of the numbers got a bit,
Sorry.
yeah, gargled out there. The two main PMI numbers that I'm looking at here, and they do come from SP, both services and manufacturing. They're both below 50, and it is continuing to deteriorate, which does support the anecdotal stories that we're seeing, so that the economy here it's not accelerating and it's not stabilizing. It's still very sluggish at this point. I think that's the conclusion that we can all agree on here for Canada. Now, what do you have there, Rich, on the US side?
Well, the US, for me, it was just so services is about 17% of the economy, roughly. And manufacturing, which gets most of the press, is the other quarter, or 70%, 30%, or whatever it is. It was the report on business services for June. So it came out on July 3rd, which is yesterday. And it wasn't good. I mean, it's now below 50. I'm trying to find the thing, which I had it and then I lost it. Sorry, boys. Yeah. So if you just go on and you can look at on the website, yeah, it's just basically more of the same. So you're having a decline in your PMI services, the overall diffusion index, but then you had a decline in employment, and the key thing is that prices paid continues to rise. And so, we haven't talked about this subject for a long time, but this idea of, I think, Steve, you were the first one really to mention it, which was the stagflation. And so, like, what does that mean? And so basically you have a situation where you have prices that are relatively high and weak growth. And so you can see, so the overall business production was contracting, new orders contracted. This is from growing to contracting. So it's, often it's the inflection points, but it's also sort of where you come from to where you're going. And so the employment is now contracting. You got inventories and backlogs of orders is contracting. And then imports are also contracting. Meanwhile, prices are still growing. And so that's a really big deal. And and when you go on the website and you can see there's a trend component, and that's very, very important for the for a lot of these surveys and aggregators. And so it's like how you were going in one direction, and then now we've switched. And it's just more of the same, really. Sorry to be the Debbie Downer, I guess.
So I mean, for the average person then, or family in America, and I'm assuming we'll have the same experience up here. It means that if you're keeping your job, you may not get a wage increase that you're hoping to, or bonus, because everything's a bit sluggish out there. You want to hold on to your job, yet the price of stuff is still going higher. So it's one thing to have prices of stuff going higher, inflation going higher, if you're making more money and all that stuff. But when we get into this, we call it the stagflationary environment, that's a struggle as well, because then the central bank has to make a decision. If they cut rates to try to stimulate the economy, so you get to keep your job, you get a bonus and all those great things, it's likely going to cause prices to go higher as well. If you don't cut interest rates, if you keep them high, or even if you raise them to try to stop prices from going higher, you're going to create all these job losses at the same time. So, central bankers, I know you're listening, but you guys have been on snooze control for the last decade with your zero near zero negative rates and QE. You know, he didn't have a lot to do out there, guys. And because was it Yellen who announced there a few years back that you know, low inflation is the biggest problem of our generation? Was it something like that?
I think it was her. It was very close.
It was like
Yeah.
what was that, like the word that she used? It was like, oh man, I have to like Google this.
Well, while you Google it, I just want to just one last thing on the services PMI. I think it's really important. So there's like chair. This is a big job. So this ISM is taken very seriously by the market, and I'll explain why in a second. But it's the new. There's been a new chair. Okay, so his name's Stephen Miller, and he said, you know, in the wake of surprisingly weak index readings in June, he was asked if brighter days were ahead for the sector, and he means the services sector. So again, 70% of 70% of the economy. And he said, and his quote was, "I really wish I could say yes." And then he said, "But nothing stands out to me, at least this month." And so for him to say that again, you know, we've talked about like auditors, we've talked about central bankers. They have to be very careful in the language. And for him to say that, it was, I think, quite amazing. And we've always talked about, Keith, the market reactions to a lot of this data, and the 2-year Treasury bond yield, which is a proxy on Federal Reserve cuts and policy, etc. I mean, basically collapsed in the wake of this data coming out, which I guess should be expected. So it fell 5 basis points in about 5 milliseconds or whatever it is. But
The longer end's pushing out, though, right?
I don't know. That's
the long end is struggling still. But the main point right now, if you go back to earlier this week, you know, the world's expecting the Canadians to keep cutting, the Europeans to cut, and everyone else, but the Americans were not going to cut. They always had the data there to say, hey, we can't cut. Things are still strong here. So the data this week is suggesting, oh yeah, they're going to cut, baby. Cut, baby, cut. Right, Steve?
Yeah. When's the next meeting? I think it's July 31st.
For the Fed?
Yeah.
Magic 8 Ball says July 31. That's right. Yeah.
What are the market odds right now? Do you have that handy?
Yeah, it's right in front of me.
Drum roll.
How long do you do the drum roll for? So for the July meeting, it is basically no change. They're expecting the Fed to stand pat.
September.
Then it's September 18th, and there's a 70% chance then of a cut. And then for the November the 7th meeting, if you put two of those combined, you know, the Fed could be 50 basis points lower than we are today. Right. But you have the big election, right? The
right
election
before the election.
What day is it? Is it the 9th or
November?
I don't know.
No, it's November 7th.
So the same day as the Fed meeting?
Is that a coincidence? It's
no.
November 7th.
I think the election's on a Thursday. The Fed meets on a Wednesday.
When's it?
And we record on Thursdays.
Which is tomorrow, but today, if you're listening.
Yes, yesterday.
We need another drum roll, don't we?
November 5th. Sugar, I screwed up. November 5th, not November 7th.
Okay,
sorry.
so the Fed will
That's
be
the U.S. election.
Fed will be cutting. Did you guys watch that debate?
I'd rather not talk about it.
Well, now they're saying, you know, of course they're talking about Sleepy Joe might be getting the push.
Oh yeah. I mean, I think we should avoid this topic completely.
Yeah, fair enough. I mean, I just was gonna trying to lean into it from like
I'm gonna try to find somebody who is a sort of political strategist who's said before that they're willing to come on the show. So maybe that will hold. But I'm like freaking waffling like crazy because I really don't think we should get into this quagmire of a subject. Keith is more ambivalent.
Well, I'm not. I guess more so like this is like if the odds are continuing to sort of, but this is what's happening is the odds are obviously going towards Trump as the next president. What does that look like for financial markets? You know, people are talking about another bull market, for the S&P, the long end blowing out, obviously, because he's going to run massive deficits and the economy's going to be running hot. And so, I mean, yeah, I just think from a markets perspective, there could be some interesting stories here that start developing.
I think, you know what, like, I don't think we should dance around politics. You don't want to come out, with a pointy stick on everything. But the debate from last week, that is absolutely 100% global news, because the sitting president of the United States clearly it demonstrated he's just not as sharp as he used to be. Early dementia, who knows what it is. Like it wasn't fun to watch, right? It was
No,
very
it was
sad.
terrible.
Because you see videos of him just from like 4 years earlier, he was sharp, right? You may disagree with someone for the views, but I mean, clearly he has declined. So it's one thing to say, okay, yeah, he's now going to be replaced or he won't be replaced. He has to be replaced, right? That's no question about it. But the real problem right now is who's running the country? Because it's quite clear he's not as sharp as
The blob is running.
baby. The blob is running the country. Absolutely. So then you go over there, so the bond market this week starting to move a little bit, because now they're starting to anticipate, that Trump will win. Again, like, don't add us for anything. It's just it is what it is. The markets don't care who wins; they just want to know who's going to win. That's it. And the expectation that if Trump does win, that taxes will be cut, so that will stimulate the economy. Spending will not cut. That's going to keep going as is. So it's not exactly friendly for the bond market. And that's what started to affect the bond market this week on the long end of the curve. So we'll see. The DNC, they have their meeting, their conference or convention, they call it, coming up soon. And, we'll see. We'll see what happens with it. But either way, like it'd be very difficult to envision him continuing for another 5 years. It just doesn't make, and it doesn't matter whether you like or dislike someone's politics. I mean, looking at this person as a human, he's in decline. He's in decline, and it's not nice to.
It was awful to watch. Is all I'll say. I mean, I felt it was painful. That's I'll leave it at that for me personally. It was not fun. And I got calls from some of my friends who do not share my political views, and they were pretty disappointed. Even my sister, who very rarely jumps into that pool, she was. Yeah, it was just. You're right, Keith. From a human standpoint, I thought it was pretty disappointing.
Yeah. So makes you wonder, right? How can the media all of a sudden do a 180 turn against the guy when? Again, that's the blob, guys. That's the blob.
That to me was the kind of the almost worse, was that for a month we were told there was nothing wrong, and then when you're put in a situation where the bright lights are on you, it was like a situation. Honestly, it was like a professional athlete when they say, "Oh, he's not injured," then he goes out there and he can't hit a free throw. I mean, it was pretty poor.
Hey, speaking of, we've got another, just pulling on another thread of ours. There was an interesting article that came out in Bloomberg showing that Google's emissions has shot up by 48% over the last 5 years due to AI. Of course, we've been hammering on this point in previous episodes, but basically showing the rise of AI. Again, the energy that these computational chips are taking up, the energy demands that we're going to need here moving forward, I think are going to put a lot of these green policies up in the air. Rich?
Well, that reminds me of a story. I think Amazon basically either bought land next to or bought a data center next to or something next to, it's a bad story, right next to a nuclear power plant. And I would say Amazon is probably one of the most dynamic and interesting companies in the world. And I think that told you sort of everything you need to know about that business. I think ASW, which is the sort of the data centers, and it's a hugely profitable business for them. We see this sort of the front facing part of their business. I love Amazon. I'm just gonna give them a free plug, not that they need it, but that's like only sort of half the business. I mean, it's really sort of the cloud computing, how they work with that business to business piece is really, really strong for them. And they basically just leased some land right next to a nuclear power plant, basically for the cheapest energy they possibly can get. And you're right,
Yep.
Steve. I think it's going to be a really, really big issue going forward.
Yes, Amazon
why
bought
not? But why not next to wind or solar? Why do they go nuclear?
Keith, you're trying to get us in trouble with the regulators. Didn't they just
Yeah.
they just passed Bill C-59 in Canada, where you're not allowed to talk about the benefits of oil and gas in any capacity or whatsoever, else they send you to the gulag.
I don't think that was passed. I think that in the end, I think that's something that was recommended by just a dude. Maybe people can help us with it. I don't think that passed.
So I'll tell you, I'm just
We're
looking
about
at
to
an energy
find out.
company.
Here we go. Drum roll. I need the drum roll.
I was just looking at an energy company's website for my own sort of, because I'm a weirdo and I do this kind of thing. And I've told you they've literally, and I will read, Competition Act amendments silence Canadian business talk and climate. So on this company's website, they've started to strip down any claims they have related to the benefits or differentiation between different fossil fuels.
Is it Pathways website? Pathways Alliance?
No, I'm not gonna name the name of the website because I don't want to get in
Whoa,
trouble.
tell us. There'll be a link in the description below. Click the link.
So why? Tell me again now. What's the reason for the policy? Let's just walk through this very quickly, like 10 seconds. Why are companies not allowed to talk?
So basically, it is that. So it's just basically the point is you're not allowed to say that certain types of energy, specifically fossil fuels, have better or worse impacts on climate change. And that's one of the key upshots to Bill C-59. And don't take my word for it. If I still remember, I think it's on page like 8 or whatever, and you can read it. And what they don't want they don't want oil companies to say is that natural gas, for example, has 60% or 50% less emissions than coal, or that, energy is vital to the emancipation of the working class, or protecting human flourishing, or whatever it is. As a result of that legislation. Yeah.
Okay. So at the same time, now Ottawa is also generously subsidizing multiple companies to set up EVs, batteries plants here.
And they're going bankrupt, like Northvolt.
Okay. So but the reason they're doing that, because they want, clean, so-called clean cars and everything. Why then are they now putting tariffs on the Chinese for exporting their EV stuff into Canada? Because if you want to have clean energy, shouldn't you be, if the China, because Rich, why don't you first explain everyone what the law of comparative advantage means from an economic perspective? We haven't used that term yet on the Loonie Hour, have we?
We have not. Can I look it up?
That's a lot of episodes. Law of care. So basically what it means, it does, every country and economy in the world, you have different advantages over other places, right? So if you are a landlocked country, you probably going to have a very low probability of success of catching lobster and codfish and stuff, and things like that. So every country has an advantage over somebody else for whatever reason. If the Canadian government's main goal with climate change is reduce global emissions, why are they now taxing the Chinese products coming in? Shouldn't they encourage it? Do you see my point here?
Yes, of course.
I know I'm being stupid with this.
No, you're
sometimes being stupid with these things are right, correct.
You're 100% right. So David Ricardo developed the classic theory, and I'm reading it now, in 1817 to explain why countries should engage in international trade. You should buy your Bordeaux from France and your semiconductors from Taiwan and your coal from Australia and your hockey players from Canada. And, you shouldn't try to force a country that may or may not have the capabilities, both labor and capital, to create something that they otherwise aren't predisposed to do. And that's really important. And it's sort of it's like one of the underpinnings of Adam Smith's sort of wealth of nations, if I remember my economics classes enough. It's the invisible hand, is I think key.
So just on the China EV story, obviously, China, of course, is basically just a stealer of IP. They don't respect, they don't really respect the rule of law, and so they basically rip off all these domestic EV manufacturers and steal their technology, and that's a huge driver for the tariffs. But I've noticed that the Canada Pension Plan put $604 million into China's electric vehicle sector. of course, which is basically no longer allowed to essentially sell vehicles in the U.S. And
But it's not just the U.S. or Canada, by the way. The EU is also putting huge tariffs on Chinese electric vehicle manufacturers. I mean, it's not. I think it's a bit too harsh to say that China doesn't steals it all, and I also think that is a long and tried and tested true. Wait a second, that is a long and tried, tested, true strategy. During the Industrial Revolution, before the Industrial Revolution, when the U.S. Sort of was coming up in the world, it stole all kinds of technology from England and then tariffed the shit out of England imports. So this is the Chinese, as you described it, did not invent that either. But you're right. I mean, they're created by BYD is an incredible car company. China is the largest exporter of cars in the world right now. And countries like Germany, where some guesses between 10 to 15 or 20% of their economy is based on auto manufacturing, are really feeling the squeeze from these new technologies and these new competitors.
Okay, let's refocus here, guys. The objective of this is not to penalize or reward someone for intellectual property creation or theft. It's to stop the earth from burning. We were told recently you cannot take a summer vacation with your family because you're going to destroy the earth. And that's my point, because it sounds ludicrous, right? It just sounds, what are we? What are we?
It's a joke.
Yeah, of course it is here. It's just hard to reconcile. And that's the point of the Loonie Hour, right? We're able to identify inconsistencies where policies are being, like, see, we just had a great conversation in the beginning of the episode about real estate. You know, none of this stuff can reconcile. You know, 2 + 2 equals, what was the quote from the movie? I forget it.
From
The Big Short. 2 + 2 equals.
Oh, I was talking about the inconsistencies one.
No,
He's searching for inconsistencies in the Word of God.
Oh,
that's
God.
a good one too. Yeah, there we go.
No,
we're not going that side.
But Keith, you're right. I mean, I've railed on the Germans shutting down their nuclear power plants. It's absurd. They had 6 working nuclear power plants. All they do is whine about climate change, and then they shut them down and are burning more coal than ever, and have higher electricity prices than ever, and to the point where they cannot compete with the likes of China to produce cars, which is what they're known for. So, Keith, I think you're right, and it's good to challenge them, and it's kind of funny.
I found the quote: 2 + 2 equals fish.
Is that from The Big Short?
Yeah.
I don't remember that one.
What scene?
Oh, it was outstanding. Yeah, it just means it's
like
nonsensical.
A Loonie Hour viewing party.
Yeah.
Oh, that would be fun. That's
Maybe
not a bad idea.
Everyone going to Rich's house tonight to watch The Big Short.
Yeah, Rich's mom's out of town, July 18th, Eventbrite. Tickets to Rich's mom's house. Booze,
Rich will pay you
pizza,
$10 to attend.
keg stands. Anyways, I think that's a good place to wrap it up. As always, guys, we appreciate the support, and we'll see you next week.